Thank you, everyone who's on time here. We'll just give it about one more minute. Again, we have a hefty amount of people who have set up for this, so we'll just give it one more minute and get started here. But again, thank you for all who are here on time. That does mean a lot. Joseph, thank you for getting on the call. Good morning to you too as well. Hopefully you're all ready to learn, get some learning in today. I am. Every day is a learning lesson, right? All right, good morning, good afternoon, depending on where you're in the country. My name is Josh Elohim. I'll be your speaker for today. Our webinar is on helping your business owners plan for retirement. Just some quick housekeeping for the purposes of this call. Everyone's going to be muted so we can get through smoothly. If you do have questions, please put them in the questions box there. Once we're finished, I will go through a full Q&A. I'll get all your questions answered. We are going to cover a good amount of stuff today, so I hope you all bear with me here, and let's go ahead and let's have some fun here. If for some reason you're not signed up with Quote and Apply, you don't have our software, you can go into the chat box where you can go ahead and sign up for your own personal account. I'm assuming that most people, if not all, already have our software, but I want to make sure to give you the opportunity to go ahead and, again, go into the chat box and go ahead and you'll see a link in there that you can sign up for your own Quote and Apply software. So let's go ahead and get started. Business owners, you know, incredible clients to work with. Obviously, they have a lot of moving parts. We all know business owners, our minds are in a thousand different places, but there's a reason why they're good at what they do, because they have vision and they've gotten to the place where they are. Life insurance provides an incredible need for business owners. Now, I know that a lot of agents are just very comfortable with selling term insurance. Well, the business owner needs, there's many more things that the business owner needs. And what we're going to do today is we're going to go over some of those things that the business owner does need. By the way, I've been doing this for 11 years now, and I've kind of been on the back burners on the wholesale side. Now, I'm truly a hunter here. So the last year or two, what I've done is I've started helping agents and their clients getting on the phone with business owners, having the conversation. I've been able to take cases from 1 or 2,000 a premium up to 22 to 25 grand. And I'm going to show you what I do here. I'm going to ask you to give me a chance on this next case that's coming up here, and let me help you to work with your business owners. So here we go. Hopefully you all know our life insurance software. I don't have to talk too much about this. So I'm just going to fly through this pretty quickly and just talk about some different opportunities that business owners need. We'll skip this. I'll just put in the date of birth here, and we'll go ahead and get started here. So the first thing I want to talk about is key man insurance. Sounds like this real sophisticated thing, but you know what? The only difference is the ownership. So what does this mean? I'm a business owner, and I have a key employee that I can't live without. I need this person. If they're not here tomorrow, not only am I in a world of trouble, but my business is in a world of trouble here. So what do? Well, you can take out a policy on that key person to cover that key person. Normally, term insurance is used. So here it is. So the question is, if this person's not here tomorrow, what's at stake? Well, you know what? I would need $500,000 to recover from not having that person. I would need $1 million to recover from not having that person. The only difference with this insurance, and I'll show you this when we go through the application, it's going to ask you, will the insured own the policy? And the answer is going to be no. It's going to say, who will own this policy? It's going to be a business. That's the only difference between buying a normal life insurance policy for you or I, or having a business owner buy a policy for one of his key people. Does that make sense, everybody? I want to keep this very simple today, very high level. Key man insurance. It's a very underserviced part of what a business owner has. So all you have to do is start asking the question, Do you have anyone in your company that you can't live without if they're not here tomorrow? Let's talk about having a conversation about a key man policy. Now, we can use term insurance or we can use permanent insurance for that as well. But let's just say we're going to use term insurance for now to keep it simple. Does everyone understand what we're talking about here? Extremely easy. If for some reason that person, you buy a 10-year policy or a 20-year policy, and that person's gone after five years, you do have the option to keep that insurance if you want to, or you can get rid of it as the owner. It's really up to you. You can also transfer ownership to the insured and then have him pay the premiums. A lot of flexibility here. So that's one opportunity with business owners, and it's called key man insurance. Very straightforward. The next one we hear a lot of is called buy-sell insurance. Okay, now I have two business owners. They both own the company together. So a lot of these owners don't realize that if one of them is not here, there's a chance they may be in business with the other person's spouse. So what attorneys will draft up is called a buy-sell agreement. And really, it's just a contract between both the owners. What happens if this? What happens if that? So that buy-sell agreement is really important. A question you can ask your business owners is, do you have a buy-sell agreement set up in place? Unfortunately, the answer to most of the time is no. We have this right here, right? This is what you see a lot of. I work with a business attorney locally in this area, and what she did for the first 10 years of her career was she represented businesses downtown who were getting sued. Now, trust you me, she would tell me story after story after story of people who were not who had this right here. When things go wrong, things go wrong. So that buy-sell agreement is really important. That's not something that you or I do. That's going to happen from an attorney. What the part that we have is the funding of the buy-sell agreement. Meaning, let's just say hypothetically that the business is worth $1 million. How much life insurance do we need here? Well, we have two partners, so we're simply going to put $500,000 on each person. Is that pretty simple, everyone? And the only difference is that let's call it business owner A and business owner B. So when business owner A does his policy, it's going to ask that same question. Are you going to be the owner of this policy? The answer is no. You're going to have business person B be the owner of that policy, vice versa. We call it a cross purchase. So again, it's extremely simple to have these conversations with your business owners, because I always like to take care of the protection part first. I don't really like to call it term insurance. Let's call it protection. Are your business owners protected? There's a very, very good chance that they don't have key man insurance for their key people. There's a very good chance that they don't have a buy-sell agreement. And there's even a better chance that they don't have it funded properly. Does that make sense, everybody? So those are real simple questions you can ask your business owner. And again, what are we talking about here? We're not talking about insurance. We're talking about protection. Is your business protected? And then it's your job to explain to them some of the challenges that can happen, because we know that they don't think about this stuff. They're focused on their business, and that makes sense. Well, there is something in our business called the F word, and it might not be what you're thinking. It's our fiduciary responsibility for our clients. So it's really our job to ask that question, the right questions to the business owner. And trust me, when you take care of them and they have this all covered, they're going to thank you for it, because it's going to give them peace of mind knowing that if something does happen, you're taken care of. They're taken care of. So we're in the business of giving people peace of mind. We don't want anything to happen, but again, things do happen. And trust me, I don't know how many people have had a chance to deliver a death claim. I know it's a challenge, but it's also a major blessing at the same time, because you've done what you're supposed to do on your side. Perfect. If there's any questions about key man insurance, buy, sell, a lot of the time people are just looking for the, how long is what's my business worth? If it's $1 million, okay, well, I'm going to look at 500,000 for each person. How long should I go for? Well, how long do you plan on being in business together? Well, we just started this company, I think at least 20 years. So here you go. You can go with either the cheapest company if you want to. I'm not a huge fan of this because there's a chance that you may want to convert this policy. By a raise of hands, which I can't see, how many people know what a conversion is on a life insurance policy? I'll wait. To keep it very simple, if I buy a term policy, I have the ability, and this is kind of rule of thumb, to convert that policy for the length of the term or up to age 70, whatever comes first. Now, normally the cheaper companies don't always have the best conversion privileges. That would be the biggest thing I'd say from the cheapest to the most expensive. If you said, Josh, well, which companies do you like for conversion? I would say I'm a big fan of Prudential for conversions and also John Hancock. Those are my two favorite. As you see, they're a little more expensive, right? But those are my two favorite to be able to do conversions on. Perfect. So I'm not going to go through the application, but I will at the end. But I will show you that step of ownership so you know about how these policies work, okay? So if I hit continue, it would bring me right into the application. Hopefully you've all seen quote and apply in the applications as well. Please, if you have questions, go ahead and ask it. Let's get a little more technical now, okay? Now I'm going to go back here. Let's just assume that, you know what, we've taken care of the protection for this business. We understand, you know, we have this $1 million need, we have this $5 million need. I can breathe now knowing that I've done a key man policy or my buy sells in place. We're happy there. What's next? And what do we know is business owners are they do have money coming out of their business. So if you look here, the next thing I always show a business owner is that, do you know that you have the ability to take money from your business to create non-reportable tax-free income? Most of the time, the answer is no. So what I'm going to show you here, we're going to dive right into this here. And this is what I do on the calls. I promise you, I'm not pushy at all. My only job is to spread the good news. That's really it. And I just educate people. When you educate people quickly with this software, they tend to make decisions much faster. So I just ran a quote here for $500,000. And just so you know, this is automatically going to give me what we call a max non-mech, which is the most money I can put into this policy. We're going to switch this up in a second, but I do want to give you some quick visuals here, okay? So if you look here, I'm going to hit show details. Hopefully you've all seen this already. If you have not, let me know, but I can go into here just tax-free. This is a great story to tell your business owners. Here it is. I always make a joke that, you know, we all hate life insurance, right? But what do we hate more than life insurance? Paying taxes, especially if you're a business owner, right? So we all get a good laugh there. Now look, this piece shows me my top income earners for my top tax rates. And as you may know already, that in California, when you add this up, we're close to 50% here. Now I call this the bucket sheet because if you have a look here, here's where your business owner is going to be putting their money, just like a normal person. So do you have money in a 401k? Have you set one up for the company? We have. Great job. To me, this is a great vehicle. If someone's willing to match me, let's say 7%, I'd put 7% of my money in there. Great vehicle. Then you have your taxable bucket, your stocks, your bonds, your mutual funds. It's like, where else can you put in 100,000 and earn $1 million, right? Nowhere else. Another great vehicle. Then you have your tax advantage bucket, which is like your Roth IRAs. The problem with this bucket is that people who make too much money, they don't qualify. So if I didn't have your attention before, I have it now because we're talking about your money, correct? Now listen, I'm a big believer in diversification. I would never say put all your money into life insurance because to me that'd be foolish. These are great vehicles, great vehicles. Now what's the challenge that people forget about? Most people think about growth, right? That's what they're focused on. Growth, growth, growth. Make as much money as possible. What do we forget about is distributions. So you see these little spigots right here? So look at this piece shows me how am I being taxed on these three great buckets, pre-59.5 up to 70.5. Because it's not how much money you make, it's how much you get to keep, correct? So here's really your sale for your client that opens up their eyes. Now that I've shown you where your money's at and how you're being taxed on it, again, I even have your attention more now. What if there's a way if I could show you how to create non-reportable tax-free income? Something you'd be interested in? No one said no to that in 11 years. So, well, there's one more bucket you may not be familiar with, and that bucket's called life insurance. A lot of people say, I thought life insurance was for a death benefit. No, that's called term insurance, right? So how am I being taxed on this bucket, pre-59.5 up to 70.5? Now, again, a lot of people may know this already, but it's a great short reminder of why we're having this conversation. A lot of agents just go right into selling and they forget that they have to make sure they lay a foundation as to reason why we're doing this. Now, probably most of you already know that the beauty of cash value life insurance is the money grows tax deferred, and I can take the money out tax free. Here you go. A lot of agents also just start talking to their clients until they're blue in the face, but never give them any visuals. 90% of us learn visually. Do you see how everything I talk about, even since we've been on this presentation, I've given you a visual of, right? And that's where it helps to stick. And that's when your client will start saying yes. So this is a really simple piece. How did I get here? I ran the quote and I just hit show policy details, and you see it right here. So you don't have to have anything else. You just have to have the software. I click here, it brings up my bucket sheet. This has really been a game changer for us. It's a really simple piece, but it tells a great story. I'm sure you've all heard this before where your clients say, hey, I'm just gonna put all my money into this bucket right here, and I'm gonna defer, and then when we retire, we'll be in a lower tax bracket, right? Well, by a raise of hands, which I can't see, how many people think that taxes are not going down, but taxes are gonna be going up? I have 3 reasons why I think taxes are going up. I don't just say that. The first thing is our deficit. What are we at, like 35 trillion right now? And we're just giving money away like it's not even real. The second thing is our social security system. Is that gonna be there when you potentially need to retire? The third thing is our healthcare system. What a nightmare, right? That's 3 reasons why we feel like taxes will be going up and not down. So there you go. So let's go back to my illustration here. Now, since we've already locked in this death benefit, do you remember we all took care of that protection need first, right? So now the next question is, hey, what are we looking at for cash flow? Are you putting money away? So let's scroll down here. And what I'm gonna do is I'm gonna change this from a max non-mech to a minimum non-mech. This is very important. This is the sweet spot right here. Now, when I do this minimum non-mech, there's 2 very important things that are gonna happen that your client should care about. The first thing is when I lower my death benefit, what am I doing? I'm lowering my cost of insurance charges all the way down to the minimum. Now, obviously, there's going to be some death benefit here, so there will be some cost of insurance charges, but it's the lowest amount. Now, you understand why, right? If you buy this policy today and you're not here tomorrow, the carrier's on the hook to pay that 100,000, 200,000, right? So there is a cost to that. But the second thing is it also lowers your agent's commission. Sorry, Joe, I know you're on the call here. And I joke with the client, we all have a good laugh for a second, right? Now, let me ask you a question, Mr. Client. If the money's not going to the carrier, the money is not necessarily going to the agent, where is it going to? Into my policy so we can grow faster. Does that make sense, everybody? That's it right there. So I did the minimum non-mech. The other cool thing is that now when I do that minimum non-mech, it asks me, how much money do you want to put into this? So now I could just, I don't always even ask the client, I just put a number in. I like to do this right here. This is where I start at. It's very easy to pivot, to do more, to do double, to do half, very simple. Now listen, I don't want to pay this premium for my lifetime. Is there any other options? I'm glad you asked that question. I click on lifetime, look it, I can pay to age 65. My favorite is a 10 pay because people can see 10 years down the road. So it's especially during their income earning years. And then we're going to solve for the most money I can take out of this policy from 66 to 90. Is everyone with me? So I just hit this rerun button. Never in the history of our business have you, the agent, been able to pivot so quickly right in front of your client. You guys, I can't even finish my lines anymore. The software is too fast for me. Big up to the tech team for making this thing so quickly here. So here we go. You see how this works here? So I have some options. I can make changes. This is great. Can we change this? Can we change that? So if I just pull this up here, I'm going to click on this PDF, right? I can go right into the illustration right here on the spot, right in front of the client. So this really makes life easy. Now, in the past, this stuff took 5 or 6 meetings to close because you have to go back to, you get your client excited, then we need some changes. This is great, but what about 500? What about 1,000? Well, have a look at this. I just scroll to the bottom here now, just put in 500. No more waiting, and I hit the rerun button. You're not waiting anymore. So we don't have people warming up, cooling down. You know, it's really 1 or 2 meetings. Let's just pull this up here. I mean, this gives me goosebumps every time I see this and I work here, but look how cool this is. I mean, we're dancing on the spot here in front of the business owner. So here we go. Here's my illustration. Is everyone with me? I mean, you could be in New York right now and I'm in California and we're doing this thing right now. You can use Zoom for this. You can use any web application that allows you to be on the screen. I'm a huge fan of face-to-face. What's the next best thing? Either Zoom or some kind of software where you can talk to your client face-to-face. So here we go. Just to recap, we have a male here, 44, preferred. Again, here's my death benefit. That's the minimum non-mech, the lowest possible. What are we doing here? We're putting in $1,000 a month. And we're doing this, look at, or $12,000 a year, and we're doing that for 10 years. So I'm putting in 120 grand. What is this product here? It's called an accumulation IUL. IUL stands for Index Universal Life. To give you a quick recap, in the past, we had variable life insurance. It was great. Market does 20%. Your client's super pumped, they get 20% credit to their account. Next year, market does minus 20%. Now your client's absolutely devastated. It's very hard to recover with these policies from negative loss. The carriers finally got smart. They created IUL or Index Universal Life. Let's use the same scenario. Now, market does 20% with this. We have a cap of anywhere from 8 to 12, depending on the product. But we also have a zero floor. So now the client's going to participate in the upside, but not the downside. Does that make sense, everybody? This is a relatively safe investment here for your client. Now we're showing a 5.7% interest rate here. Let's have a look and see what's going on here. Something that always comes up is my fees. Like, how much am I paying for this? Well, I take my 12,000. My accumulation value is what's currently growing in the policy right now. I take my 12,000, subtract it from that number. Those are my cost of insurance charges year one. Very high level. Now, with these policies, we have what's called surrender charges. Why are these here? Well, there's money the carrier has to pay for underwriting. They have to pay commissions to you. And so there's higher fees for them in the earlier years, so they're protecting themselves. So if I said, hey, I want to take all the money out of this policy and run away with it and be done with it, that's what you would get year one. So obviously, you don't want to put your money in year one and leave. As you see, this is going to grow over time, right? And at some age, you're going to see that this number is going to be equal. Let's see what year this is. Does everyone see it right here? It looks like year 11. Now, that means that my surrender charges are going to be gone at that point. Now, I always have a death benefit, so those never go away by cost of insurance, but there you go. So this money is just going to grow, right? I put in 120. Let's scroll down here. I have two options in my retirement, and this can be for the business owner, right? So I put in 120. I have access to about 233,000. Does everyone see that? That's tax-free, not bad, right? Or the smartest thing to do here is I'm going to use this to supplement my retirement with my other buckets, right? So if you take a look here, I could take out about 17.7 from age 18 all the way to age 90. And at that point, I pulled out, have a look here, I put in again the same 120, but I pulled out 324,000 of tax-free income. Oh, and by the way, I still have a little $30,000 burial policy, right? Business owners love this, but they love what I'm going to say next, the most important. Do you know, Mr. Business Owner, that you can pay for this out of your company? That's when the real blessing, the eyes open for them, and they're like, are you kidding me? I can pay for this out of my company? So this is a real sweet spot for a lot of business owners. It's not difficult. It's very simple to have the conversation. There you go. A few questions that come up. The first thing is, this is what we call a flexible premium contract, universal life. So it's flexible. And what that means is we're showing a 10 pay here. Okay, great. Well, guess what? I can pay this for 10 years. Let's just say things are going great with your business. Well, in year 11, if you want, I could pay year 11. I could just keep paying that 12 grand. Vice versa, let's say in year 7, you have a rough year. Well, because you have cash growing in the policy, you have the ability to use the cash in the policy to pay premiums. So you could skip a payment if you wanted to. I always tell people to try to do your best to not touch the money during your funding years, but again, things happen. So that's one thing that comes up. The second thing is that you have access to this money, Mr. Business Owner, after the first year for whatever reason you want. Anything. Now, again, try not to touch it during your funding years, but so the question, I like to go back and forth here. Let me ask you a question again. If you need money Now that you know how you're being taxed on these 3 buckets, if you need 20 grand, 30 grand, which bucket do you want to pull from here? I'll wait. The answer is none of them, correct? Because now that you know how you're going to be taxed on this bucket. So visually, what are we doing for you, Mr. Business Owner? Again, we're creating a 4th bucket that you don't have access to right now. And that bucket is creating non-reportable tax-free income for you and your potential business partner or you yourself. Does that make sense, everybody? This is the bucket they're going to want to pull from first. Because remember, when I go back to my cheat sheet here, I don't have any penalties for taking money out here. There's no RMDs when I get older. This is a great vehicle. There's no rules. You may have heard of a 529 plan for college planning. Great vehicle. What's the only problem with it is that it has to be used for health or education. You can use this for a 1-year-old and use this for college planning. If little Jimmy doesn't act right, guess what? You use the money for whatever you want. It's really in your control. This can be put into a trust as well. A few more quick things here, because I want to talk about one more thing before we finish here. So the other thing that comes up is tax-free. Like, is this really tax-free? It's kind of a gray area, right? Well, this is how I explain it. Whatever you put into this contract is called your basis. If you look here, we're putting in $120,000 here, right? Well, life insurance is paid for with after-tax dollars. And what that does is it gives me the ability to have the money come out tax-free on the back end. Does that make sense, everybody? But here's how you physically do it. Up to my basis, since I've already paid taxes out, I'm going to take that money out via a withdrawal. It's just like calling your bank and saying, hey, I want to take money out. They don't ask any questions, right? The next dollar that comes out of that money, now I'm going to switch over to a loan. You may have heard the terminology become your own bank or bank on yourself, which you're hearing a lot of right now, because what happens is this carrier might charge me 1 or 2 or 3% to borrow the money. But then what's going to happen is they're going to credit me back that 1, 2, 3% year end. It's what we call a wash loan. Now, here's the key factor. Listen in. As long as your client never surrenders this policy and they die with it, what is the death benefit to the beneficiaries? Anybody? Anybody? Tax-free. No matter what happens, the death benefit is always tax-free. So as long as your client never surrenders this policy and they die with it, they're never going to have to pay taxes on the gains in the contract. Did that make sense, everybody? Really important to understand that. Now, there's one other thing I talk about here that a lot of agents are afraid to talk about. Well, if you look here, in any type of life insurance sale, if there's any growth, any type of cash value growth, you have to show the absolute worst case scenario. So here it is. Now, I call this Armageddon because there's 2 things that have to occur which have never happened in the history of our business. First thing is that in this situation, Nationwide has to charge their maximum cost of insurance charges every single year. Never happened in the history of our business. The second thing is even crazier. The S&P 500 has to do 0 every single year. If those 2 things were to occur at this client's age, if I scroll down here, 68, does everyone see that? They would have to put more money into the contract. Now, would you all agree if the S&P 500 does 0 for 24 years, we're all fighting for food and survival, correct? We're not thinking about this life insurance policy. Well, that's the 0 column there. I sleep very well at night because I disclose everything. I'm not hiding anything here. So there you go. Last thing I want to show you guys with this is that we're showing here a 5.7% interest rate. The S&P 500 over the last 30 years has averaged around 10%. But if you factor in a cap and a floor, then that lowers down. I think we're going to get more like 6, 7, or 8% here on average. But look, 5.7 is what we're running it at. This is the classic definition of under-promising and over-delivering. If your client is happy with, this number here, if this does 1% more, 6.7%, you and I both know these numbers are going to change tremendously, right? So again, as you see, I'm very passionate about this. Unfortunately, as a country, a lot of us are guilty of this, but we're not saving money. We're spending every dollar we make. So I also call this a forced savings account, but you can do this savings account for your business owners. And remember, the money can come out of the company. Really, really important. Please, if you have questions, ask those questions in the chat box there. I want to show you one more thing. Okay, we've taken care of our protection. We've taken care of the ability to have some accumulation giving you some flexibility, and I have to put all your money into, not have to pull from any of the buckets you already use in there. And we've created non-reportable tax-free income for your business, for yourself, and to reap the benefits, also your beneficiaries as well. Last thing I want to talk about here is long-term care. I don't know if you all heard, but the state of Washington is so passionate about long-term care that they made it mandatory to have long-term care in that state, or you're going to be taxed. Well, just so you know, they're talking about doing this in 8 or 9 other states, and there's a very good chance that your state is one of them. So this is really important. We're going to go over right now. Long-term care. I don't have to stress to you how important it is. Well, guess what? You have the ability with your business owners to have the conversation. And let me show you here. When I want to pivot to long-term care, I have 2 options here. I'm going to go to either Universal Life or Protection IUL. So I'm going to click on Protection IUL for now. The younger you are, the better opportunity this is going to look for your clients, obviously, right? Because if you're 60 or 70, it's going to cost a lot more money. So have a look here. Now, just so you know, we have traditional long-term care. That's an option, right? What I mean by traditional is standalone. We have that. So if you want it, you can get it in our system. What's the problem with traditional long-term care? Well, now, fast forward to now, it's very expensive. You're not locked in. The carrier can raise the price. But the third thing, which is the scariest part, is it's use it or lose it. You could pay premium for 20, 30 years, never have a long-term care issue, and guess what? All your money is gone. That's pretty expensive auto insurance, wouldn't you say, Dennis? I would agree. So the carriers finally got smart, and they created something called a long-term care rider. I'm going to keep this very simple. Whatever your death benefit is, it simply gives you a pool of money for long-term care. If I have a long-term care issue, you can draw down from the death benefit dollar for dollar. If there is no issue, I still can set this up where I have that same cash value story as well. Now, my death benefit has to be higher because, again, that's the pool of money I get for long-term care. So let's just show you real quickly. I'm just going to go into here. I'm just going to add a 0 here. So we're going to go back to $1 million. Does everyone see? I could just say, hey, I want to say with LTC rider right here. That's how easy it is to add it. We had some challenges with the Washington of people getting confused. So if you look here, we added categories. This is not a critical or chronic illness riders. No, that doesn't count. This is true long-term care. What do I mean by that? You have to have 2 of the 6 ADLs. I can't feed myself. I can't bathe myself. There's a 90-day elimination period, and you can accelerate the death benefit dollar for dollar. So this is a conversation that I have with business owners. All right, so again, I'm not a big fan of asking anyone to pay when they're 80, 90, so I like to do that 10 pay. And again, you can do whatever you want there. I'm just giving you some ideas. I'm going to hit the rerun quote. So it's rerunning that quote for a $1 million pool of money for long-term care. Does everyone see how fast that was? So there you go. So there it is. If I hit the show details, look, I just added a long-term care rider. This is the same concept where the client can pay, the business owner can pay this out of their business. Same story. Now, if they're in their 50s and 60s, it's going to cost a little bit more money. They don't have as much time, right? That's a key thing right there, really important to understand. So I want you to start having this conversation with your 40-year-old business owner clients. And I'm not saying you have a ton of them, but so here we go. So I'm going to hit this PDF button now that I've seen that, and we're going to pull up this illustration. You can do this right in front of your business owner client. There's 2 things there's a key word here that's really important. What are we talking about here? We're talking about what we call living benefits. What do we know life insurance as? A death benefit, right? So living benefits is a great word. And here's a really simple question you can ask your business owners. Do you have the old type of insurance or the new kind? What do you mean? The old type was geared towards a death benefit. The new type has living benefits. And there's 2 living benefits here. So if you have a look here, I have $1 million pool of money for long-term care right here. I also have $1 million death benefit. So my pool of money is my long-term care. But I also have some cash growing in this policy, just like before. And if you look here, I can get up to 4% of this policy or up to $40,000 a month to pay for long-term care. Why are you saying up to, Josh? Well, per every state, we have what's called a per HIPAA diem amount. In California, that number is close to, that's 320 right now. Multiply that number by 30, that's $10,000 you can get out of this policy today. There is no built-in inflation into these. And so that's your inflation right there, because that per HIPAA diem amount is going to go up. You can always Google what that number is in your state and see what that is there, okay? So again, your living benefit is the pool of money for long-term care. You get up to 4%, and here's what it's covered. People want to get taken care of in their home. Would you all agree? If you're paying for it, right? All right, so let's dive down here very quickly to the meat and potatoes. I thank you all. This is going a little bit longer than usual, but I thank you all for being on the call here. So here we go. Here we go. So if you look, again, we're doing this in 10 years. Let me zoom in. Can everyone see that okay? We're doing this in 10 years. So obviously it's gonna be a little bit more. So if you look, there's my 10 pay premium. 10 years, we're putting in 193 here, okay? When I look to the right, I have my $1 million pool of money for long-term care, which is why we're having this conversation. That's my living benefit. My second living benefit, it's the same situation where, look at, I have cash growing in this policy, just like my normal IUL. Does everyone see that? My 5.7% interest rate. Same story we just talked about. So if you want, you could combine these. Now, you know, when you raise that death benefit, it's going to raise your cost of insurance. So you could do this all in one sale if you wanted to. I just want to give you the heads up. The reason why it looks really good for a 44-year-old, everybody, is just time. That's it. This is not a new secret here. You guys know about compounding interest, right? Remember your accounting class in college? The professor said if you put away $1 a day from 18 to 65, you'll be a millionaire. I don't know about you, but I didn't listen. But it's really just compounding interest here. Now let me scroll down here. I put in 193. Now let's look at my retirement age here. Let's call it 65, right? Look how much money I have sitting in cash value in my policy. Let me repeat that. I put in 193,000. Look what I have in my surrender value of cash value here. Does everyone see that? I never want to use the word free insurance, but do you see what I'm talking about here? The money that the person, not only do they have what they put in, they also have a lot more sitting right here in retirement income. This makes perfect sense. You got to start having this conversation with your 40 and 50-year-old business owners. Now, obviously, if I put a 60-year-old in here, it won't look as good, right? But there'll still be some cash, but it's not going to be more than what you put in. This is why we have to start having this conversation with younger people. Do you know you can add this rider as young as 18 years old? Why would I ever do that? Well, guess what? When the state of Washington had their challenges, we were getting phone calls from 30 and 40-year-olds asking about long-term care. This is a big issue in our country, is what it means, and we're not going to be able to pay for this. So you have the F word, the fiduciary responsibility to educate your clients on what's out there. Is it your job to make them buy? No. I always joke around, if they don't want to buy, you put your hands in some water, you wash your hands, and you say, thank you very much. I would recommend that you type up a form and have it for each product you're offering that says to them, hey, I offered you long-term care, and you said you didn't want it. It's great for them to sign that. Half the time they won't sign it, they'll buy the product, just so you know, just a heads up, okay? Perfect. So that's really that's life with long-term care rider for your business owners. Again, they can pay the premium out of their business. Does that make sense, everybody? That's really important for them to understand. Perfect. Any more questions about this long-term care rider? It's a great conversation to have. Can you see how that $2,000 sale turns into a $22,000 sale? Because they buy this, they want this, they need this, they don't know about it. So it's your job just to educate them. I promise you this, if you are willing, book a meeting on my calendar. I'll do this presentation with you / for you. We'll start off with the easy stuff, key man, buy, sell. We'll transition to the more comprehensive stuff. And it's really not that bad. Once you hear me do 1 or 2 meetings in this, you're all smart people. You're going to hit the ground running full speed here, okay? Let's wrap this up. This is great, Josh. I want to move forward. Or what's next? You and I know what that means, but I like to have some fun here. Someone was like, whoa, slow down, Mr. Business Owner. I'm glad you like Nationwide in this situation, but they actually want to date you as well. What do you mean? Well, all you're saying yes to right now is an application and an exam. Let's see if they like you as much as you like them. Little takeaway, right, everybody? People, they love that. The second thing is this is a 60 or 70 page paper application. This is life with long-term care rider. So this is a thick application. Maybe you pulled this bad boy in the past and your client has a heart attack and dies on the spot, right? Well, now all you have to do is hit this continue button. It's going to bring you right into the application. The second part that people always the third part people wrestle with here is that how much money should I do? I don't know that answer. Here's a great way to get them to move forward. What I say is you apply for the most you think you might want, because it's very easy once you get that offer to come down to fit your budget. It's a little bit harder when you say, hey, I'm going to go from 500 to $1 million. So what's the most you think you might want? Well, it's $1 million. Perfect. All right. I hit the continue button. We're in the application. Did everyone see what I just did right there? I close about 90% of my cases that I work with, just so you know. And again, we're not doing anything but an application and an exam. I put my email address, and I'm going to fly through this pretty quickly, just because hopefully you've all seen this already. I put in the first part of my address in here. You'll see all the information auto-populate. Pretty cool and scary at the same time. Is this person employed? I'll just say yes. Let's see, this is for the business owner. We'll pretend we're doing that. Okay, what's the business address? There you go. All right. Remember I talked about this? Will this person own the policy? Here you go. So normally you say yes. Now we're going to say no. Who's going to own this policy? A business. That's it. Does everyone see that right there? Those are the only questions you have to answer for key man, for buy sell, and if this policy is going to be owned, and if you do the cash value sale with him, it'll be owned the same way if he wants. If you do the long-term care, it's all owned the same way. Business, what's your relationship, tax ID, phone, ownership. Who is the signer here? Remember, if it's a cross purchase, it'll be the other person, correct? Just to make it easy, I'll just say individual, so we fill this out fast. If you have any questions about that, please ask me if you have any questions about that. Perfect. I pushed one wrong button, and here we go. All right. You see, oh, this is interesting. You see, it can't be the same person, right? That's funny. Okay. So let's keep going. So you can add a beneficiary if you want to back up the primary. Oh, I guess I have to answer this question now. Let's go back. Sorry, here we go. All right, we're moving forward here. Please ask your questions. Contingent beneficiary if I want. Here, business income, assets, liabilities, social, state. We're flying through this pretty quickly. There we go. If they have any existing coverage, I would just add the policy right here. Let's say no for now. Let's keep going. We know we have that portal if we want to log into to get those medical records. I won't do that for now. Height, weight, if I didn't put that in the beginning, I got to put that in now. Answer a few medical questions. I can bind coverage here if I want, or just say no. We know about those nightmare exams, built-in service here for based on exam 1 for across the country. I can pick my day on the spot. I pick my time. Hit next. We just booked the exam. And then you guys know about DocuSign, right? So we DocuSign the app. Perfect. So last thing I want to show you is we have some cool, easy ways to market this. If I go to the boss, I go to marketing. Look at, we have 7 different templates for you to pick from. Look at the first one, business life insurance. Here you go. We have it all right here at your fingertips, right? You can send your emails out manually, or you can use our HTML feature and paste those if you have your own email service. So I'd recommend using that. I'd also recommend the policy review to see what your business owners currently have right now. We also have the long-term care we talked about. There you go. So this is some easy ways to promote and to market these opportunities. I've taken much more time than I normally do, but again, hopefully you can see we had some things to talk about today. So listen, I greatly appreciate all your time. If you have questions, please go ahead and reach out to me if you have questions. Here's my contact information. If you want to put questions in the chat box, we're going to have a Q&A session. Thank you so much for all that stayed on here. Hopefully this has been helpful. You can book a meeting on my calendar right here, and you can schedule that meeting with your business owner. Give me a chance. I promise I will not let you down, and I'm not pushy at all. Thank you again for the opportunity. Put your questions in the chat. Talk to you all soon, and have a blessed day. Here come the questions. All right, so here's a question, you guys, and ask your questions, put them in, and don't be afraid. Will states like Washington accept the LTC rider hybrid? Absolutely. This is long-term care, so this passes for the long. Now you have to pick the option I showed you, which was long-term care rider. Do not pick the critical or chronic illness. Okay, it has to be the long-term care rider, and yes, it will qualify for the state of Washington. So Dennis, you said, are you doing any business continuation protection? So, this is it. Obviously, if there are kids in the business that are looking to take over, then, if the dad has a cash value life insurance policy or has a long-term care, the money can still be used in the business. So the goal here is everything should be owned by the business if it's for business purposes. If it's not, then own it individually. And then hopefully, if there is, if someone is taking over the business, we have that set up, right? And we have that whoever that person is will be involved in this, whether they're a key person for key man insurance or whether they're on there for the long-term care or for the cash value as well. Great question, Dennis. Any other questions? I can't be that good. Someone's got to have some questions. Here we go. Thank you. More questions. Someone said if the time frame was 15 or 20 years, would you use variable instead? Well, remember, just to recap, that variable bucket is probably going to be taken care of already, right? What I want to give people is stability. And that's what IUL can give you is stability. And it gives you, we're not doing it to beat the market because that's what this is for. We're not doing it to create more money. I don't like when people call this an investment because it's really just, what is it? It's creating a fourth bucket, which is that non-reportable tax-free income. That's what it's really doing here. We don't want it to be in the market. We really want it to be, for the IUL. So again, if you manage money, I think what you do is phenomenal. I'm not here to replace what you're doing. These are great vehicles here, and I love them. But for this purpose, because if you go the long-term care rider, I think it's important to really have that stability, and that cap and that floor is really important. Hopefully that answers your question. We do have variable, by the way. If you want to use variable, we do have variable. So I'm happy to have a conversation if that's something you're interested in. Any last minute questions? Anything else? This will be the presentation will get emailed out to everybody, so you can watch it again. You can pause it. You can rewind it. If you do have clients for this, give me a chance. This is really my presentation, and I probably make a few more jokes so we can have a little more fun. But I love talking to business owners, and the thing is, they haven't heard this conversation before. It's brand new for them because unfortunately, a lot of agents aren't comfortable having this conversation. Well, I want to make sure that if you work with me, you're going to be comfortable, okay? So if you have it, just book a meeting in my calendar. If you want to talk to me first about it, just go into the boss system and book a meeting here. Or in any email I've sent to you, I have my Calendly is in my email. You can schedule a meeting above my picture as well in any of the emails I've sent you. So I'm happy to have a conversation first if you'd like. Again, I really appreciate all your time. Thank you for those that stayed on. Let's see if we can really help to change some business owners' lives here, okay? You all have a blessed day, and we'll talk to you next time on next Tuesday. Thank you. Bye-bye.